Good afternoon, entrepreneurs. Welcome to another masterclass series, Financial Planning for Business Growth. We held one on Tuesday. It was really impactful. We got a lot of feedback from entrepreneurs that they enjoyed the session. It was very insightful. So now we're having the series 2. So again, welcome from across Africa. But, I just want to encourage everyone to pay very close attention to the session for today as we develop our business plan, develop our financials, and, also develop your 2 to 3 minutes video. All of the lessons you're going to learn from this session would help shape and help you develop a cohesive business plan and help with your financial projections. So please just listen. If you have questions, note your questions down. We'll take questions at the end of the session, and, you can ask them, and the facilitator will be able to, provide quality responses to your questions or inquiries. Again, my name is Ibuko Odiride. I'm the Entrepreneurship Program Manager. And with me or joining me today is Omoumi. Omoumi, has held several masterclasses on financial planning, on, financial projection for your business. So please, again, you're welcome, Omoumi, to the session today. We also have Foko Rollins. Foko Rollins is our French translator, is also a mentor on our program, has helped a lot of entrepreneurs, with their business development, and also helped them whilst they're taking their training. And I also have Kehinde joining me today. She's also going to be supporting with the session. So I'm going to hand over to Foko now to translate to French so we can, start the session in full swing. Over to you, Foko. And again, you're all welcome and thank you for joining us.
Bonjour tout le monde et bienvenue une fois de plus à cette session de masterclass. Aujourd'hui, nous échangerons sur la planification financière pour la croissance de votre entreprise. Donc, je suis Roland Foko, facilitateur francophone et mentor à la Fondation Tony Elumelu. Aujourd'hui, nous aurons Omoumi qui va nous faire cette présentation sur les projections financières. Donc, sans plus tarder, nous vous souhaitons encore la bienvenue et rachetez des notes. Thank you. Over to you.
Okay, thank you, Foko. So now we're going to hand over to Omoumi. So over to you, Omoumi, to start the session, Financial Planning for Business Growth. And please, entrepreneurs, pay close attention to and listen carefully, to everything Omoumi is going to say. It's going to help, again, like I said, help shape how you develop your business plan and financial projections. Thank you. Over to you, Omoumi. Thank you.
Thank you, Ibuku. Good afternoon once again. Good afternoon, everyone. So we're going to spend today's session very focused on the financial planning template and the financial planning part of the requirements for the program. I want to encourage everyone that, even though you have received the template, we got some comments on the Tuesday session that the template felt very overwhelming and it felt a bit complicated. I assure you, it's not complicated at all. Let's just, I want you to just, with an open mind, let's go through this session together, and then you realize how really straightforward it is to do your financial planning requirements and complete your financial planning templates. Before we start, I want to spend some time just talking about why we need to spend time on financial planning as entrepreneurs. It's very easy to see it as a technical requirement and maybe a nice to have. But financial planning, even as an entrepreneur, it helps you know your numbers. It helps you pay attention to the key numbers of your business, especially the numbers around your sales, your revenue, your cash flow. Are you making profits or you're not making profits? It helps you get financial planning. Also is around thinking about the future, thinking about not just what the first year, second year looks like, but 3 years out, and thinking about whether your revenue and all the money that is coming in from your sales to customers will be enough to finance the big expansion plans that you have for your business. And if they are not going to be enough for you to course correct at this time, either to revise your cost strategy, or think of how to sell more, or maybe increase your price, or think of how to get more money, either through equity or debt injection. So it helps you to fund your growth. It helps you think about the unexpected. What you don't want as a business is for you to be running and in out of the blues, you find out that you've run out of cash. So it lets you know at what your reserves should be, how much you should always have at hand, cash at hand, so that you can pay for your inventory, pay for supplies, pay salaries, and keep your business running. It also helps in investing strategically. So you know that based on what you need to spend time on, you can if you need to invest in your marketing, in your sales, in your talent, it gives you an idea of, because when you are done with your financial planning, you come out with your projections of what your profits and loss, your balance sheet, your cash flow will look like for the next 3 to 5 years. And you can easily see whether you're going to have any kind of challenges, negative cash flow, negative net loss, and you plan ahead and decide on what strategies you're going to put in place to make sure that that doesn't happen. And then it also allows you to review and adapt. So you can adjust your budget. If your budget is not looking right for you, if it's not going to get you to your target, your target place as a business, you adjust it very early on and not wait until it has the risks have materialized. So we want to spend time just talking through what the financial statements are. So your financial planning, financial projection is basically putting together your financial statements and projecting them, showing what your financial statements will look like for up to the first 10 years post-investment. When we say financial statements, what are we talking about? We're talking about these 3 financial statements, which every company, even publicly listed, if you are, whether you are a young business, your growth stage business, every company, every business, every for-profit business usually represents their financial reports, their financial position using these 3 financial statements: the income statement, the statement of cash flow, and the balance sheet. Now, this visual you're looking at here is a conceptual way to represent these statements. When you look at them, if you pick up a financial report of any company, you will see them, and then you're going to see a lot of lines and tables and line items and numbers. But conceptually, this is what these financial statements, this is how they can be represented. Your income statement is a position, is a picture of your revenue minus your expenses, and whether that yields a net profit, that's if your revenue is more than your expenses, or whether that yields a net loss if your expenses is more than your revenue. But your income statement is essentially your revenue, your expenses, and the net profit or the net loss. Your statement of cash flow is a position, is a picture of the 3 places from which cash flows into your business or flows out in your business. 3 categories of, or 3 ways cash flows in and out of your business. It flows in and out through operating activities, also through investing activities, and through financing activities. And then when you add up the net cash flow meaning cash inflow minus cash outflow. When you add up the 3 net cash flow, you get your overall net cash flow. We're going to go into what investing means, what financing means, and operating means in the next couple of slides. And then finally, it shows you the position of your balance sheet, your assets, your liability, and equity. And we're also going to spend some time talking about that in the next couple of slides. I'll pause now for translations. Coco, over to you.
Thank you very much, Omoyomi. Donc, nous allons commencer par vous dire quelle est l'importance de la planification financière. Donc, la planification financière est importante parce qu'elle nous permet de faire plusieurs choses. Première chose, ça nous permet d'avoir une idée de nos chiffres. Et avoir une idée des chiffres permet de les mesurer et de les gérer. Ça permet d'avoir une traçabilité de cash flow, donc de la capacité d'autofinancement, de la marge du profit et surtout des différents chiffres qu'on mène chaque année. Ça permet aussi de trouver les financements pour la croissance. Parce que vous savez, toute entreprise a tendance à croître pour atteindre ses objectifs. Ça permet aussi de prévoir les inattendus. Et pour cela, on peut avoir un fonds d'urgence sur les 3 à 6 mois qui permettent bien évidemment, en cas d'incident, de pouvoir réagir de façon facile. L'important de planning, de la planification financière, c'est aussi d'investir stratégiquement. Et à ce moment, il faut prioriser les dépenses et les actions marketing de vente qui ont un retour qui garantissent un retour sur investissement. Et enfin, ça permet de revoir et d'adapter de façon trimestrielle et de façon périodique la santé de l'entreprise, de revoir la santé de l'entreprise et l'adapter de façon périodique afin de pouvoir garantir des performances pour notre entreprise. Next, please. Donc, pour cela, nous allons aborder les états financiers. Et en termes d'états financiers, nous avons principalement 3 états financiers à la base. Il s'agit du compte de revenus, le compte de revenus ou compte de pertes et profits. Donc, c'est un compte qui nous permet, bien évidemment, d'avoir les revenus, veut dire compte de résultats. Ce compte de résultats permet de comprendre que une entreprise, quelque part, doit avoir des revenus et des charges. Alors, c'est la différence entre ces revenus, ce chiffre d'affaires, ces ventes et les charges de l'entreprise qui nous permet de savoir si nous faisons des profits et si nous faisons des pertes. Le deuxième tableau, c'est le tableau de financement, le tableau de cash flow. Donc, c'est un tableau, le tableau de trésorerie, le tableau de cash flow, c'est un tableau qui nous permet de savoir exactement quels sont les flux de trésorerie entrants, c'est-à-dire quelles sont les opérations qui nous permettent de faire rentrer le cash dans l'entreprise, de faire rentrer les ressources dans l'entreprise. Et en face de ça, on voit aussi quelles sont les opérations qui nous permettent de faire sortir de l'argent dans l'entreprise, il s'agit en l'occurrence des activités d'investissement. Et pour finir aussi, ça nous permet de voir comment est-ce qu'on fait pour avoir des financements au sein de l'entreprise, quelles sont les activités à mener. Et la différence de tous ces opérations, la somme ou bien le matching de ces opérations nous permet de savoir exactement quel est le cash flow, quelle est la trésorerie nette que l'entreprise a en devant elle à tout moment. Et pour finir, le bilan. Le bilan social, c'est une opération qui permet d'avoir d'un côté les avoirs, les actifs, et de l'autre côté, les passifs. Et à côté de ces passifs, on va aussi mettre les dettes. Du côté des passifs, nous avons les dettes est à gauche, asset, et le passif est à droite, liability et equity. Merci. Over to you, Omoyomi.
Thank you, Foko. So I'm noticing some comments in the YouTube chat session around the template not being editable, the drop down not working. We are going to get to all of that in this session, so just be patient. We'll get to that. But I would like everybody to just follow along so that you grasp the main principles of the financial planning and projection. And once you get that, you can go on ahead and solve for all the different challenges you're facing using your templates. But let's follow along so that we get the principles of the financial projections in the first place. So I want to spend some time talking about the 3 different statements and how the different components of the 3 different statements interact. The first one is income statement, and the income statement is, simply put, is a summary of revenues gained and expenses incurred during a specific period in time. So your income statement is usually telling a picture, giving a picture of your financial position at a point in time, and it's usually generated at the end of a year. So if you're projecting for 3 to 5 years, you're going to have 3 to 5 income statements generated. And it's providing information about the business's ability or lack thereof to generate profits. So when you think about your income statement, you're going to see these different categories or line items, and I won't spend time talking through what they mean. The line items in the income statement are put across 4 categories, 5 categories. Is your revenue, and in your income statement, you can record both cash sales and credit sales. There's your cost of goods sold, and this refers to the costs that are incurred in the process of preparing your goods. So these are business costs that are very particular to your production stage or your creation stage. And then you see things like your raw materials, your factory overhead, cost of storage, cost of transporting your raw materials to where you produce. and also your production-related salaries. So the salaries that you give to your staff that are involved in production. For instance, we use the example of an organic skincare business as example in Tuesday's session. So cost of goods sold, there would be the staff that are involved in actual producing of the shea butter, lotion, and the black soap. And then there are other staff that are involved in selling, marketing, distributing. So only the salaries of the staff involved in production will be reckoned for under cost of goods sold. Cost of goods sold for services like business, it can look like things like development costs, server costs, for software development business. For services business, cost of goods sold might appear a bit difficult to account for because you don't have actual physical raw materials or factory overhead. But think through the categories of services of costs that you incur that are related to your revenue, that if you don't spend on those costs, you cannot incur revenue. And if your revenue, if your sales volume increases, those costs traditionally increase. So this can be costs for training. If you have to train your staff, you have, let's say you run a training business, the cost involved in training the staff, the cost involved in renting a hall to train your staff, because it's always going to be like to train your customers, it's going to be a one-time event. So cost of goods sold, the rule of thumb is this is a cost that if I don't spend it, I cannot make money, because it is very related, it's related to the very act of even producing that good or service that I am making money from. Then selling general administrative costs, expenses, these are other categories of salaries, other expenses, other salaries for management, for marketing, for sales, for administrative people, administrative expenses like rent, office supplies, cost of transporting your product to customers, so like dispatch related expenses, cost of utilities, marketing, advertising costs, insurance, maintenance, travel, and depreciation. So you see, this other category of expense, see how they differ from the cost of goods sold, in that you can spend marketing and advertising costs and you might still not sell, you might still not earn any revenue. You can spend money on electricity, water, gas, internet, and you might still not make sales or earn revenue. So these are costs that are not related to the actual production of your goods or your services. Then you also have interest expenses. This apply to businesses that are taking out loans. So there'll be interest expenses, but if your business hasn't taken out a loan, there won't be any business expense. And then another category of expense is income tax expense. Another way to think about your income statement is from a waterfall approach, where your income statement represents the waterfall of where, if you think about your revenue representing a large bowl of water or a large glass of water, this green box we see here makes reference to your revenue. And then what are the things that reduce that revenue up until the time you now get to the point of your net profit? The first thing that reduces it is your cost of goods sold. Second thing, sales and general administrative expenses, then your interest expenses, then your income taxes, and then whatever is left after all of those expenses have been made is your net profit or your net income. And when you think about your margins, your gross profit is computed after cost of goods sold has been removed from revenue. So gross profit is revenue minus cost of goods sold. And then we also have operating profits, which is computed after cost of goods sold and selling general administrative expenses have been removed from revenue. I would discuss cash flow statement. Cash flow statement is the second financial statement, and this records the amount of cash and cash equivalents entering and leaving a company. So you can think of all the cash in your business as starting with that cash pool, and then you see the boxes, the elements on top referring to how cash flows into your business, and the elements at the bottom representing how cash flows out of your business. Like I said, it flows out flows in and flows out through three different types of activities: operating activities, investing, and financing. Operating activities are simply cash collections from customers. Whenever your customers pay you money in exchange for goods and services, those are considered as cash collections from them, and those are considered your operating activities. How cash flows out through operating activities are payments to your suppliers, payments to employees, payment of income taxes. These are things that are considered as cash outflow through the course of your operation. Now, investment has to do with purchase of fixed assets, fixed assets like property, plant, and equipment, and also buying up, making investments in long-term investment instruments. Like, for instance, if you have additional excess cash in your business and you don't want it to just be sitting in the bank, you want it to earn some income for you. If you put it in treasury bills or fixed deposits, any money that comes out of that, you can always put that money back into your business. And when that money is coming back into your business, it's recognized as cash flow from investing activities. Cash outflow from investing activities is when you have to, I think I mentioned that the inflow comes from when you sell a property, plant, or equipment. And then the outflow comes, or investing outflow, comes when you purchase the property, plant, and equipment, or when you purchase long-term investment. So as money goes out, is an outflow. As money comes back into your business, is an inflow. And then finally, financing. So financing inflows are when you borrow money, if you have to take out debt to finance your business, when the bank is paying you, or that institution that you borrowed money from, when they're paying you the money into your business, is considered a cash inflow from financing activities. Also, when you ask angel investors, equity investors, family and friends, you tell them that I'm running a business, and if you give me some money, I can give you a portion of the business. You sell shares to them. When they send that money to you, that money is considered a cash inflow from financing activities. So financing activities are generally of two kinds, from debt or borrowing and from equity. And then outflow is when you have to repay those money, when you have to repay the dividend, repay the borrowing. When you borrowed from the bank, you have to repay with the interest. When you want to buy back the shares, for instance, maybe you asked your brother or your sister to invest in your business and you gave them 10%. And maybe all of a sudden they want to use that money for something else. And you say, please come and buy back these shares. So buy back 2%, let me hold on 8%. So that money you're going to spend in buying back portion of your business, repurchase of shares, that process is called a share repurchase. And that money you're spending in buying back a portion of your business is a cash outflow from financing activities. So think about the three ways cash moves in or moves out of your business: operating, investing, and financing. I will pause here now for translations. Foko, over to you.
Thank you, Omuyumi. Donc, nous allons maintenant rentrer en détail dans les états financiers, à commencer par le compte de résultat. Donc, le compte de résultat, c'est un compte, comme on l'a dit, qui permet que d'un côté, nous ayons les revenus ou les rentrées et de l'autre côté, qu'on ait les charges. Donc, en termes de revenus, ça peut venir. Donc, les revenus vont se caractériser par deux choses: les ventes en cash et les ventes en crédit. Donc, pour ce qui est maintenant des coûts des biens qu'on achète, on peut avoir des coûts pour les matières premières, pour les salaires, pour les charges pour les charges consommables, pour le stockage et enfin le coût de transport du matériel sur le site et de la matière première. OK. Pour ce qui est maintenant des charges liées à l'administration générale, vous avez par exemple, une fois de plus, des salaires. Ça peut être le salaire lié au marketing, à la vente, à la gestion. Vous avez tout ce qui est charge administrative, c'est-à-dire les locations, les approvisionnements en fourniture et les locations de bureaux. Vous avez aussi les coûts de transport des produits finis auprès des clients. Vous avez les utilitaires comme l'électricité, l'eau, le gaz, Internet. Vous avez les charges liées au marketing et à la publicité, les charges d'assurance, les charges de maintenance, les charges de voyage et les amortissements qui sont des charges non décaissables. À côté d'autres charges, vous avez aussi les intérêts liés aux opérations. Donc, les intérêts liés à tout ce qui est prêt. Et enfin, vous avez aussi les rentrées d'argent, les taxes locales qui sont des taxes que l'entreprise paye. Next, please. Donc, on a ici un tableau récapitulatif qui permet de voir comment les charges diluent le revenu. Le revenu, c'est ce qui est en vert. En vrai, le revenu, ça peut être cash ou à crédit. Et voilà comment les charges sont en train de diminuer. Donc, progressivement, quand on progresse, les charges se diminuent ou bien viennent diminuer tout ce qu'on a eu comme produit au niveau des revenus, au point où à la fin, ça c'est ce qui est rouge, à la fin, nous nous retrouvons avec un profit net ou bien une perte nette. Donc, ça, c'est l'opération de compte de résultat. Next, please. Donc, le deuxième compte, please, OK. Le deuxième compte que nous allons voir, c'est le compte de trésorerie. Le compte de trésorerie, comme on vous l'a dit, on va distinguer les activités d'opération, les activités d'investissement et les activités de financement. Alors, d'un côté, tout en haut, nous avons, concernant ces trois activités, nous avons comment est-ce que l'argent rentre dans l'entreprise. Et en bas, nous avons comment est-ce que l'argent sort de l'entreprise. Donc, pour entrer dans l'entreprise, concernant les activités des opérations, nous avons tout ce qui est paiement des clients. Au niveau des investissements, nous avons comme activité qui fait rentrer de l'argent dans l'entreprise. Nous avons quand on procède aux ventes de façon globale des biens, des équipements. Nous avons aussi les dettes à long terme et les dividendes qui viennent bien sûr de nos investissements. Donc, au niveau de l'activité de financement, nous avons l'argent qui rentre lorsque nous faisons des prêts et lorsque on a l'ouverture de capital. Donc, il y a injection d'argent dans le capital. Alors, tout en bas, concernant les sorties d'argent, pour les opérations, nous sortons de l'argent quand on paye les fournisseurs, on sort de l'argent quand on paye les clients, on sort de l'argent quand on paye les taxes. Au niveau du tableau des investissements, comme activité de sortie d'argent, nous avons les achats des biens et des matériels pour produire, dont les actifs. Nous avons aussi, lorsque nous prenons des prêts lorsque nous faisons des prêts à long terme, ça fait sortir de l'argent. Et pour finir, au niveau de l'activité d'investissement, nous avons, quand nous payons les dividendes à ceux qui sont actionnaires au sein de notre entreprise, nous avons, quand nous payons les remboursements des dettes, et pour finir, lorsque on fait les paiements des actions et les paiements des intérêts. Donc voilà les activités qui permettent de gérer notre trésorerie. Et au milieu, nous avons le solde. Next, please.
So this is where I stopped my
OK.
the last one. Okay, so
OK.
we move on to the last financial statement, which is a balance sheet. And like I had mentioned earlier, it's a summary of your assets, liabilities, and shareholders' equity at a specific point in time. It's very focused on what your company owns and what your company owes, and then also the amount invested by shareholders. If you want to visualize your balance sheet, you can think in terms of the weighing scale that has on one side your assets and on the other side your liabilities and equity. And at every point in time, that balance sheet, that weighing scale is balanced. When we talk about assets, there are two main categories. There's your current assets and then your non-current assets. Your current assets are your cash assets. Essentially, any assets that you can be made liquid in a very short period, anything between 30 days to 90 days. What are your current assets? They are assets that they're your liquid cash, your cash, anything that you can convert into a cash and use it as cash, the way you will use cash. Your trade receivable, I will get into that. Trade receivable is essentially money that your customers are owing you. Your inventory is the products that you've made and they're in your storehouse, you're here to sell them. Your prepaid expenses are the money that you've spent, you've made upfront for short-term use. Like if you paid rent upfront, you're using a property and you paid rent fund. That's categorized as your prepaid expense, or you need to use electricity or water, and you paid for not just the time that up until the time that you are in now, but you paid for upwards, maybe for 6 months out or 1 year out. That money you've made, you've put into that prepayment is considered as prepaid expenses. And then short-term investments include, like the example I gave, where if you have excess money, like if you get your $5,000 and you don't have plans to use it immediately, and then you don't want it to just be sitting in your bank account so that there is no temptation to maybe use it for something else, you can put it in investments, like fixed investments that would turn around within 90 days or very short periods, like fixed deposit or treasury bills. So those qualify as short-term investments. Your non-current assets are in this category: your land assets, machines, equipment, any big equipment that you have that is in not just vehicles as well also qualify. Your furniture qualifies. Laptops, if you're using laptops in your business, they qualify. Any big, very expensive, what is considered as a capital assets that you have purchased for use in your business, these are your non-current assets. On the liability side, you have also current and non-current liabilities, and then it's the same logic. Non-current liabilities are things that you don't have to pay, their debts or loans that you don't have to pay back within a short time period, within the next 90 or 3 months or 6 months. There are things that you have to pay. You have a longer time to pay back. Those are your non-current liabilities. But your current liabilities are payables, like trade payables, money you're owing suppliers, compensation payables, money you're owing your employees, money that they have worked for, but you're yet to pay them as at the time you are preparing your balance sheet. And also tax payables, money you're owing, corporate income tax that you're owing. Also, deferred income also is considered current liability. That's another category of liabilities. And then finally, shareholder equity, which it comprises of owner's equity. That's the money you have put into your business, invested capital, like money that Tony Melu Foundation is putting into your business, and also retained earning. That is what is left in your business after expenses have been deducted from the revenue, your net profit. So let me pause here for translations before we move into the next part of this presentation.
OK, thank you. Yes, le dernier tableau qui nous restait à expliquer, c'est le tableau, le bilan. Et comme on vous l'a dit, le bilan, c'est d'un côté les actifs, de l'autre côté les passifs. Dans le passif, nous avons les dettes et les fonds propres, qu'on appelle equity. Donc, pour ce qui concerne donc, les actifs, c'est en fait la destination de l'argent, c'est-à-dire qu'est-ce qu'on fait de l'argent. Et à ce moment-là, il faut distinguer deux choses: les actifs courants et les actifs permanents. En haut, ça c'est la présentation anglaise. Dans la présentation française, les actifs courants sont en bas et les actifs permanents sont en haut. Donc, les actifs courants, c'est par exemple tout ce qu'on a comme cash équivalent, c'est-à-dire les créances, le compte caisse, le compte de trésorerie et autres. Nous avons aussi les inventaires qui sont les stocks que l'entreprise a. Ça peut être le stock de matières premières, ça peut être le stock de produits finis. On a aussi le fait que les clients payent en avance, ou bien les investissements de court terme qui ont été faits. Au niveau maintenant des actifs permanents, nous avons les installations, le matériel. On a tout ce qui est fourniture et aménagement au sein de l'entreprise. Nous avons les terrains et nous avons les équipements. Donc voilà tout ce qu'on retrouve dans le bilan à droite, à gauche du bilan, c'est-à-dire les actifs. Du côté du passif, c'est d'où vient l'argent qu'on a utilisé pour investir dans les actifs. Cet argent peut venir en dette, et les dettes là peuvent être aussi des investisseurs ou bien des actionnaires. Donc, au niveau maintenant des dettes courantes, parce qu'on a les dettes courantes et les dettes à long terme, ou bien les dettes permanentes, ou bien dettes à long terme. Au niveau des dettes courantes, nous avons bien évidemment les coûts de dette auprès des employés, auprès des impôts et auprès des fournisseurs, et tout ce qui est paiement différé. Au niveau maintenant des prêts, des dettes non de long terme, nous avons les prêts et les emprunts de long terme. Et pour finir, nous avons aussi les fonds propres qui sont des fonds des actionnaires. Ça peut être ce qu'ils ont mis dans le capital, ça peut être les bénéfices non encore distribués ou bien tout ce que eux, les actionnaires ont mis au sein de l'entreprise. Donc voilà comment est-ce que nous équilibrons le bilan dans un projet. Thank you. What to you?
Thank you, Foko. So for those, noticing that some people have started working on their financial projection based on the questions in the live chat. For those that haven't, but even this is a helpful guide for everyone, what you want to spend time doing so that you are able to move very easily, this process is an easy process for you. You want to spend time sitting down to estimate what are the costs you need to set up and run for the next 3 to 5 years. Consider one-time cost, that's the cost to just start up, and then ongoing cost, that's your cost of operation. Estimate how you will earn revenue, which is revenue, your price, revenue referring to price times volume, and volume is either the number of customers or the frequency of purchase. And then you confirm that your revenue and costs reflect the impact of all your functional plans. This is very important. If you have expressed your strategies that you've outlined in your business plan for your product, your pricing, your marketing, your talent, your distribution must be reflected in your projected revenues and costs for the business. So this is very important. Like in your business plan, you've expressed a hiring plan under organizational management. You've said that you have 3 staff now, or in the next 3 years, you will go to 6 staff. You will start with 5 staff, move to 6 staff. Make sure that when you go into your financial statement and you are doing your estimations on headcount, it is showing exactly that number. Don't show 3 staff, go to 6 staff from year 1 to year 3. Then in your financial statement, you will then show 3 staff, just 3 staff, no good for year 1 to year 10. That means it's showing that your business plan and your financial templates are not saying the same thing. But you must make sure that every strategy you've outlined, your talent and organization strategy, your marketing strategy, your product and feature strategy. Let's say marketing, you said that you run discounts and you can run 50% discount for the first 1 month so that you can attract customers. Make sure when you're projecting your revenue for your first 6, you said you do discounts for the first 1 month. Make sure that your first month is reflecting that discount on your revenue that you said you spoke about in your business plan. And then also estimate how you will need to finance your business, whether you're going to need to take out debt, equity. In your funding request section, was it space there to reflect whether you're still going to go and look for more debt, look for equity and all of that, and what proportion do you estimate that you will need for your next 3 to 5 years? So we're going to go into your financial template. First thing we want to spend time really talking about is that when you open the financial template, it might look complex. It looks like there are 7 different tabs. But all you need to fill is the first 2 tabs, your instructions and your assumptions tabs. Your 3 financial statements, they're going to be automatically populated from what you fill in the assumptions. So you don't have to bother yourself about creating a profit and loss projection, balance sheet projection. Just fill the assumption tab and all those other 3 will be populated. In the assumptions tabs, there are 10 different sections. There's a general section in which you fill your business country, and of course, you will automatically select your currency. You will enter your products and services, fill in your tax, interest, and inflation for your country. So those 3 areas are very specific to your country. Fill the tax, interest, and inflation that applies in your country. Then under growth rates, you're going to estimate how much your sales volume, your pricing, and your business costs are going to increase year on year. Startup costs, estimate how much you would need to get your business started. Startup costs are optional for growth business. If your business is in growth stage and you've already spent all that money on land, equipment, you've already made all those investments, you don't need to account for startup costs. Headcount analysis, you enter your salaries, your wages, and then you will also estimate the staff growth year on year. Operating costs, what will you need? How much are you going to need to keep your business running? And it will show you the different categories of operating costs, and then you just fill in the value for your business. Under revenue, you estimate your monthly sales volume, the sales price, and if there's any seasonality. Seasonality is optional for a lot of businesses. If you don't think there's any seasonality impact, and we'll talk about what seasonality is, you can just leave it 100% for all the months. But if your business encounters seasonality, you account for that impact on your sales volume. Then under working capital, we're going to enter 3 ratios: days payable, days receivable, days sales of inventory. We're going to talk about those 3 ratios. We're also going to account for what mix of financing you make up your year one, whether there's equity. If there's equity, how much you need to inject. If there's debt, how much you need to inject. So you notice that 9 and 10 are optional because you might not have any plans to seek outside additional financing, and that's okay. Just make sure that if you have not expressed that you are going to seek additional financing, you don't need to fill those last 2 sections in your financial template. So I'll pause here for translations, and after this section, I'll step this PowerPoint down, and then we're going to go into the financial statement, the financial template, and we'll walk through how to fill the financial templates. So I'm stepping back to balance sheets, which is where I stopped. Foko, please, over to you.
Okay, thank you. The next, please. Ok, donc nous allons maintenant voir comment développer vos projections financières. Le développement de vos projections financières entraîne ou implique 4 étapes importantes. La première étape, c'est l'estimation des besoins, des coûts de vos besoins pour pouvoir gérer l'entreprise sur les 3 à 5 ans. Donc ici, il faut considérer tous les coûts de démarrage et les coûts de fonctionnement opérationnel. Ça, c'est l'étape 1. Deuxième chose, c'est estimer comment l'entreprise va générer de l'argent, va générer un revenu. Et nous savons que l'équation des ventes, l'équation de revenus, c'est le prix unitaire fois le volume. Donc ici, il est important de voir qui sont les clients et quelle est leur fréquence d'achat. Troisième chose, c'est de confirmer que ces revenus et les coûts reflètent bien et impactent dans le plan de fonctionnement de l'entreprise. Ici, la stratégie est de faire ressortir un business plan avec les produits, avec les prix, avec le marketing, le talent, l'organisation, la distribution. Donc, comme quoi, vous devez avoir en idée que l'exercice qu'on va faire dans la suite, c'est un exercice où que vous devez maîtriser votre activité et matérialiser toute votre activité sur le plan financier. Dernière chose, c'est de déterminer comment est-ce que l'entreprise va se faire financer dans les 3 à 5 ans. Et il est question ici de gérer les dettes, de gérer les entrées, les participations, les entrées en capital, et ou des deux. Et surtout de voir quelle est la proportion entre les dettes et les fonds propres qui sont constitués par les fonds mis par les actionnaires. Ça, on appelle le capital. Next, please. Alors, quel est le cheminement pour pouvoir générer vos états financiers? Allons-y voir à travers le modèle que la Fondation met à votre disposition. Ce modèle a 7 onglets, c'est un fichier Excel. Il a 7 onglets. Et on commence par des onglets d'instruction et d'hypothèses qui vont permettre de générer les 3 états financiers que nous vous avons déjà expliqués. Et vous devez noter que tout est automatique. Donc, ne remplissez que les zones qu'on vous autorise de remplir. Le reste des calculs se font automatiquement. En conséquence, dans les hypothèses, dans la section hypothèses, vous devez comprendre les 10 points suivants. Il y a l'option générale. Ici, il est question pour vous de sélectionner votre pays d'origine et la monnaie que vous allez utiliser, ainsi que les différents produits et services, les taux d'intérêt, les taxes et comment est-ce que vous démarrez en termes d'inflation. Vous démarrez votre activité en termes d'inflation. La deuxième chose, le 2, c'est les taux de croissance. Ici, la question pour vous d'estimer comment est-ce que va progresser un certain nombre d'éléments comme les ventes, comme les prix, comme les coûts opérationnels. Vous devez indiquer comment ils vont progresser d'année en année, bien sûr en donnant des taux. Ce sont les données que vous allez mettre dans les hypothèses ou les données que vous allez mettre dans votre logiciel pour le programmer. Troisième chose, c'est les coûts de démarrage. Donc ici, il est question pour vous d'indiquer quels sont les coûts de démarrage. Vous les verrez, ces coûts-là. vous devez avoir en idée les montants qui vont être bien pour votre modèle. Ça, c'est optionnel. Quatrième chose, ce sont l'analyse des charges des opérations. Ici, il faut entrer, par exemple, comment est-ce que vous allez payer le personnel. Il faut indiquer comment est-ce que vous allez payer le staff, déjà leur nombre et comment est-ce que vous allez les payer. Ce qui fait qu'en fonction des taux, des taux de croissance que vous aurez déjà mis au préalable, il y aura donc une génération des salaires d'année en année qui ne dépendra pas de vous. Donc, rentrez juste les taux dans la volet hypothèse ou données. Vous aurez en cinquième chose les les coûts opérationnels, les coûts de fonctionnement. À ce niveau-là, il est question pour vous d'indiquer quels sont les coûts d'un certain nombre de charges de fonctionnement de votre entreprise. Le sixième point, ce sont les revenus. Vous devez ici estimer mois par mois le volume, les prix et la saisonnalité de votre activité. Au niveau du fonds de roulement, vous devez indiquer quels sont les délais de paiement des fournisseurs, les délais de paiement des clients et la durée des stocks, la durée moyenne des stocks au sein de votre entreprise. Au niveau du financement des démarrages, nous sommes déjà au point 8. Dans le financement des démarrages, vous devez indiquer quel est le mixage entre le capitaux propre et les dettes. C'est-à-dire quel est le montant de capital que vous mettez dès la première année. Au point 9, le financement en capital. Ici, il faut indiquer le montant du capital dont vous avez besoin et qui doit être injecté chaque année pendant les 10 ans. C'est optionnel. Et le point final, c'est l'endettement, le financement par les dettes. Vous devez ici indiquer comment est-ce que votre activité sera financée. Donc, quelle est votre politique d'endettement? C'est aussi optionnel. Thank you, Omuyumi.
Thank you. And now I'm going to step down this presentation. So this country codes, for those that are complaining that they cannot see a drop down, yeah, maybe you're not using Microsoft Excel, because if you're using Microsoft Excel, you'll see a drop down. But if maybe you're using Google Sheets, you can take note of this screen and flash it. Just take a screenshot and then find your country code. So if you're Nigeria, your country code is 37. If you are Ivory Coast, your country code is 23. If you're South Africa, your country code is 45. So just where you see number 53 on that dashboard in front of business country, where you see 53, change that 53 to what your country code is. And then you should populate your country currency all over the financial templates. Before we go into the financial templates, Foko, please, could you translate what I just said? Then we will then move to the translation.
Oui, ici, en fait, il y a certaines personnes qui ne voient pas leur pays et leur monnaie parce que ça, c'est généré automatiquement. Donc, vous devez retenir ces codes-ci, le code de votre pays. Et là où vous allez voir un code qui ne correspond pas à votre pays, vous mettez le code de votre pays, vous verrez que votre pays va apparaître automatiquement ainsi que la monnaie. Donc, on va prendre deux exemples. La République démocratique du Congo, c'est le code 13. Le Sénégal, c'est le code 41 et l'Ouganda, c'est le code 52. Donc, ça, c'est pour ceux qui certainement ne sont pas dans Excel, ils sont bien dans Google Sheet. Parce que normalement, il y a une liste de choix qui vous permet de choisir votre pays. Thank you.
Thank you. So I'm going to stop sharing momentarily so I can start sharing the Excel sheets.
Donc, nous avons arrêté la présentation PowerPoint. On va passer dans le tableau Excel pour vous montrer comment est-ce que vous allez l'utiliser. Donc, elle va partager le tableau.
All right. So I've opened my Excel sheets and I've opened it in Google Sheets so that the limitations that we're having with it's being editable and all of that, it appears most people are using Google Sheets. So I'm using my Google Sheets to walk through this demonstration so that we can all follow along. So like I said, there are 7 tabs: instruction, assumption, income statement, balance sheet, cash flow, summary, and glossary. And all you need to, the glossary is here for your information. It's just for you to look and see some of the words that are used that might not be familiar. It's just for information purpose. But all you need to fill is your instruction. You fill your name. Please make sure you fill your name so that when you're submitting, you can be reconciled to you. Fill your company name as well and your email address. And then once you do that, you can go to the assumptions tab. All you need to do is in instruction, just fill these 3 places. And then in assumption, you fill the different 10 sections as it applies to your business. So I mentioned that when you see 53, actually it was 51. So for instance, I'm using a business in Nigeria. I will change this number 51 to 37. And then I press enter, you will notice that all the currency references in the sheet have converted to Naira. So you can see it's all converted to Naira. So instance, I think number 13 is Congo, if I remember. If you change it, you will see that the currency has changed. So all you need to do is note your currency code and then change this number here, the number in front of business country, to the code for your country. Let me change that back to Nigeria 37. So now we're going to walk through the different sections in the template. The first section is general section. As we mentioned, all you need to provide here is the name of your product and services, your company tax rates, business rates, bank interest and inflation rates. Please make sure you change this to what applies to your country. Let me walk through the example of, for instance, a catfish farming business in Nigeria. So businesses in Nigeria, the applicable tax rate is 30. So I'm going to change the 60% here to 30. Interest rates, I believe, is in the area of 21%. I think it's higher. And then let me just work with an inflation rate of 18%. Some of these numbers are dummy numbers, but just for the interest of time, I would use these dummy numbers. This depreciation rates here, you don't need to change any one of them. You can leave them just the way they are. And then in this section, before I move away from general section, I will put in the name of my product and my services. So I would, as a catfish farming business, I can put sales of processed, packaged, smoked catfish. If you have just one business, you can leave this service 2 and service 3. It's not compulsory at all. But if you have more than one business, and make sure it's a related business, because I know I came across some questions that says, I'm running both a catfish farm and I also run an event planning business. Should I put those 2 businesses there? Please only put the business that you know you submitted application stage that made you get shortlisted into the program. Don't add a new business or a different business, because that might create problems with your application, where they are wondering that what happened here? Is this a different person, or is this an impostor that stole somebody else's plan or application? Please make sure you use only the product and service that you put in your first stage application. That's actually the very same business idea that got you shortlisted is the business idea that you are going to build a business plan, financial template, and financial planning for. So let me run the example that, for instance, maybe my own business, I run a catfish farm, and in addition to selling packaged smoked catfish, I also train people on catfish farming. So I can add a second product, training and consultancy on catfish farming. Again, product service 2 and service 3 is not compulsory. If you don't have more than one Sorry for the break in transmission. Please confirm I'm audible. Please, can you hear me on the call?
Yes, we can hear you.
Thank you very much. So over to growth rates. And then in growth rates, it says, enter the expected yearly growth rates for your business below. You can use the growth rates to demonstrate projected expansion plans for your business. So again, in this growth rates, you have to make sure that what you're putting in the growth rate section reflects the impact of all the things that you said you were going to do in your business plan. Well, because I don't have a third, because I do not have a third product, I'm going to remove these numbers. These numbers are not relevant actually, so I'm removing them. If you see these numbers on your template, you can remove them, even though they don't make much of a difference. Also, something else I wanted to point out on the template is you will see this legend at the top here that has 2 different shades of gray. So it's a guide for how to fill the template. Anytime you see this shade of gray, where my mouse is, you can impute data in cells colored like this. Any cell that you see this other shade of gray is a cell that has formula. So don't input any data in them, it's automatically computing. So what you're going to do here in the growth rate session is estimate what your growth rate will be year on year for all these categories, for your revenue, sales volume, price, and then for costs. So for your revenue, for instance, if you've estimated in your business plan that you're going to do a lot of extensive market entry and expansion strategy, and that's going to grow your sales volume by up to 100% in your first year. Maybe for instance, when you started, you have 500, you're selling 500 catfish on an annual basis, and you're sure you can, with all the plans you have, you can grow to 1,000, selling 1,000 catfish. You can grow by 100%. You can put a growth rate of 100%. And then you know that you're not going to be growing by 100% every year, because it then becomes unrealistic, and it's not, because imagine growing by 100% every year. After a while, it is too unrealistic, even in, not just from a business planning perspective, but even from having to manage a growth of 100%, your business might cave under the pressure of having to grow by 100%. So you can, if you know that you're going to embark on very transformative initiatives to dramatically grow your business in your first year, you can put those, and then maybe for the next couple of years, you can put what you believe your business growth to stabilize to based on your projections. I'm putting all these numbers up onto year 10. If you see any dummy numbers already on your templates, just remove them and replace them with your own numbers, so that your template is not computing something that you did not plan for it to compute. So I've entered revenue, and I'm just going to copy and paste this one for the next line, even though it might not be true to life, but I'm copying and pasting because of time. Please make sure you're putting the numbers that are true to you in your own presentation. Then price. How do you estimate price growth rate year on year? Estimate the price growth rate that is in your price growth rate. You must strike a balance between keeping your prices attractive to your customers and growing your prices so that your cost of inflation and cost of running a business does not catch up and start to erode your revenue. So make sure your price and your volume is growing in a balanced manner, not too much so that your customers are not put off and have to go elsewhere because you're too expensive, and not too little so that your costs do not start to catch up with your revenue. So let's just estimate. If a decent estimation is of price is maybe 5%. It can even be 3%. Again, I'm just putting in these dummy numbers so that we can move things ahead. But let your price growth be based on what your market research, what you've learned about how your customers buy, how your competitors price. So let you reflect your understanding of your market. I'll do the same thing here just to move things fast. Something else, why I'm putting in these numbers, I want to address something I saw in the comments where there was a question that my business is an idea stage. So do I just project for year 1? Or someone said that the template is too complicated because they're an idea stage business. Please listen, you're an idea stage business, and the foundation knew that before shortlisting you. They shortlisted you because they believe your idea has potential to become a business. So you cannot, in your business plan and financial templates, reflects just an idea. Show how you are going to grow that idea into a business. So you must still build out your projections for your first 3 to 5 years and your 10 years, because you want to demonstrate to the foundation that you believe that you have what it takes to turn that idea into a business. And you're telling the foundation, this is what my idea will look like when it's a business. So you must still build out your projections, whether you're an idea-state business or you have only been running for 1 year. Please build out your business and don't stop your business and projection outside your run, because what that's you are communicating is that you don't believe your business will be in existence after the first year. And that's not the case. So build out a full-on projection, no matter what stage your business is in. Plan, think big, plan ahead, believe in your business, believe in your idea just as much as the Melu Foundation believes in your idea, and actually build out a very holistic blueprint of how you can convert your idea to a business. So let me move on to costs now. How do you put your project for your growth in costs? A rule of thumb is most of your costs might be impacted by your country's inflation. So maybe with the exception of utilities, which is usually produced by the government, and government tries to stabilize those prices. So you can put in what's the historical way cost of electricity, cost of water has grown in your business. It usually is not much. It's usually in the area of 1% to 5%. So I'm going to put in very low numbers for cost of utility growth, for growth in utilities. But for the other costs that you know are affected by inflation, you can just put in your country's inflation rates, because you know that most people are going to, maybe subscription and licenses might not grow as much as that, because there are also business people like you that are offering subscriptions and they don't want to run off their own customers as well. So I'm just going to push out the numbers. Hopefully, but even though this 15% I'm putting is a very conservative, it's saying I just want to be safe, that no matter how bad costs rise, I'm covered. But ideally, in reality, maybe I'm speaking my own reality because I'm currently in a country that is experiencing hyperinflation. But most of the time, costs don't go more than 5 to 8%. But you can just decide to either be conservative or be optimistic. The choice is yours. Salaries might not go at that rate, but you also want your salaries to grow. You don't want it to go too low, to your growth rate of salaries to be too small. Because if you're not growing your salaries fast enough, your employees, after a while, they will leave you and go to competitors that are paying competitive rates. So you want to keep your salary growth rates at a decent pace, and no less than 5% annually, no less than 5% annually. Again, I'm giving you just a general guide to these numbers, but let your numbers here be guided by the operating environment prevailing in your own country and what you've learned about your own business environment. So let me just put in 15 so that I can move things ahead here. And at this point, I will pause for translations. Foko, please, we start from general.
Thank you. Can we start by instruction, please? OK. Donc, pour remplir le modèle financier qu'on vous a donné, vous devez commencer par l'onglet Instructions, où vous devez renseigner vos informations. Ça veut dire votre nom, le nom de votre société et votre email. Rappelez-vous qu'il faut utiliser l'email avec lequel vous avez soumissionné à la fondation. Next, please. Assumption. Après l'onglet Instructions, nous passons à l'onglet Hypothèse ou Données. Ça va dépendre de comment ça va apparaître. OK. Ici, nous avons dans le bloc A, général. Le bloc A, c'est général. Au niveau de business country, c'est-à-dire votre pays d'origine, vous allez voir qu'actuellement, c'est 37. Comme on vous a dit tout à l'heure, tapez le nombre qui correspond à votre pays. Pour le Cameroun, par exemple, c'est 7. Donc, sur le Camerounais, vous tapez 7 et ça va me correspondre. Et au niveau aussi de la monnaie, vous allez donc taper aussi business currency, vous allez aussi taper et la monnaie va sortir automatiquement. Donc maintenant, il est question pour vous de paramétrer 3 produits maximum. Produit 1, produit 2, produit 3, produit ou service. Vous devez taper le nom de votre produit de façon intelligente. Et on suppose qu'à ce niveau, si vous avez déjà fait votre business plan, donc vous avez déjà une bonne idée d'un certain nombre de choses. Donc, maximum, vous mettez 3 produits. OK. Au niveau maintenant de compagnie tax, le taux d'imposition des sociétés, vous devez mettre le taux d'imposition de l'IS qui est appliqué dans votre pays. Au niveau du taux d'intérêt bancaire, vous devez mettre le taux d'intérêt bancaire que vous souhaitez et que vous espérez être optimal comme celui qui va permettre que votre projet soit rentabilisé. N'oubliez pas que ici, c'est un simulateur. Donc, il y a des données que vous pouvez mettre en fonction des résultats, vous venez changer pour que ça corresponde mieux. Taux d'inflation. Vous devez, à travers Internet ou les recherches, savoir quel est le taux d'inflation dans votre pays et vous indiquez, ici, on a mis 18. Maintenant, au niveau des taux d'amortissement, ce sont des taux légaux. Vous devez savoir que building, c'est les bâtiments. Vous devez mettre 5. Généralement, les bâtiments s'amortissent sur 20 ans. Les fournitures, c'est les installations. Vous devez mettre 15%. Les équipements et les machines, 25%, ainsi de suite. Donc, mettez les taux d'intérêt qui correspondent à ceux qui sont utilisés dans votre pays. B, please, growth rate. Donc, une fois avoir mis ces hypothèses, vous rentrez maintenant dans les taux de croissance. Vous devez donc déterminer les taux de croissance de tout ce qui est revenu. Par exemple, vous voyez que les produits que vous avez mis au préalable vont automatiquement apparaître en bas de revenu. Le nom du produit que vous avez mis en bas va automatiquement apparaître. Maintenant, quelle est la croissance de votre volume de vente en termes de quantité? Vous indiquez ici, par exemple, on a mis 100% la première année. On a mis 30% la deuxième année, 20%, ainsi de suite. Pour le moment, quand vous ouvrez votre modèle, il est vierge. Vous devez donc remplir. Et remarquez qu'on remplit les zones qui sont un peu grisées. Les zones blanches, ce n'est pas les zones que vous pouvez remplir. Normalement, c'est bloqué. Quand vous testez là-bas, ça ne sort même pas. Le prix, ici, on a mis au niveau du prix 5%, 5%, 5%, 3% la quatrième année. Donc, vous devez de façon intelligente et en fonction de vos études et analyses de business plan, mettre la croissance du prix de vente de vos produits. Ça, c'était pour le produit 1. Le produit 2, ici, on a vu training en consultancy. Le produit 2 que vous allez mettre pour sortir, vous mettez la même chose, le taux de croissance des quantités et le taux de croissance des prix. Nous n'avons pas de produit 3, c'est pour ça que c'est vierge. Au niveau des coûts, cost, vous commencez par les coûts variables. Vous mettez le taux de progression des coûts variables année par année pendant les 10 ans. Les salaires, vous mettez le taux de progression des salaires. Les loyers, vous mettez le taux de progression des loyers. Les utilités, donc électricité, eau, gaz, Internet. Vous avez vu qu'ici, les taux aussi sont régulés parce que ce n'est pas des choses que les prix changent régulièrement. Au niveau maintenant des coûts de marketing et publicité, coûts administratifs, maintenance, assurance, transport et les droits de licence. Vous voyez qu'ici, on a pratiquement mis le taux d'inflation parce qu'on sait que ce sont des charges qui sont liées à l'environnement. Au niveau de la licence, ça dépend de l'accord que vous avez eu avec celui qui vous a concédé des licences. Donc, I think it's all. C.
Yes, that's all.
Okay.
Thank you. Okay, I noticed in the comments that some people were asking, why am I putting percentages? That 2%, 2% of what? Please note, pay attention to this column E, units. That's where you will know whether you're supposed to be putting a percentage or a number. At this stage now, we're still on growth rates. Growth rates are all percentages. We've not yet started putting the numbers. So B, growth rate, is just for percentages. It is in the later sections between C, D, E, F. That's where you start putting the actual numbers. But right now, what you're projecting is growth percentage. And to know what a historical growth rate is, for instance, on utilities, ask yourself, last year in my country, what was the total amount or amount that was the tariff, base tariff for electricity? Then 2 years ago, what was it? Let's say, for instance, in 2023, we're paying 100 Naira per kilowatt hour. In 2024, you're paying 102 Naira per kilowatt hour. What's the growth rate year on year? That is, you compute growth rate, which is the difference between the 2 years divided by the first year times 100. And then when you do that, I believe that gives you 2%, if my math is correct. So compute historical growth rate, and then you can determine whether the historical is a good determinant of the future and estimate accordingly. But you must, most of the time, what you have to estimate with is what was the cost that was obtainable in the past? How has the cost been growing year on year in the past? And you can use that to grow it in the future. Except maybe you also have general advisory in the country where you can tell your country has already released a tariff rate annually, and it's shown you that from 2025 to 2035, this is how much the base tariff will be. So you can use historical data, or you can use any futuristic plans, any projections that has been made available. But what you're putting right now in growth rate is percentage, which is showing growth year on year. I'll move on to startup costs now. And like I said, use this column E. If you see where my hand is, E5 units. So all through these assumptions, you will see that the column E is showing you the units that it needs to apply. So anytime you see this hash sign, you're putting a number. Anytime you see your currency, you're putting the value in numbers, whether it's a Naira. Anytime you see a percentage sign, you're putting a percentage. So don't mix it up. Don't put number where you're supposed to put percentage. Now on startup costs. And then I saw another question that if I have spent all this money, do I need to reflect it in this assumption? No, whatever money you've spent historically, you don't need to reflect it in this projections. Remember that this projection is projecting for the future. It's not showing you past what you are spending in the past. It's building projections for the future, not for the past. So any money you've spent, you don't need to reflect it here. For instance, number C is startup costs. Some of you are not really startups. You've been running your business for 3 years, 5 years, 1 year. All these costs, land, building, furniture, equipment, some of you have already spent them. You don't need to put in anything here. If you've spent money on land or building, you can leave this place blank. This startup cost is not usually relevant for growth business. But if you're a growth business and you're still about to buy equipment or you're still about to buy vehicles, you can leave the number there. But any money you have spent already, just remove it. You don't need to reflect it in startup costs. So I am running an example of a growth business that just needs to buy, they need to buy new equipment and machinery. So you can put in the cost of the equipment you want to buy and the vehicles you want to buy. Something else you will note on the startup cost section that you notice that as I was putting in number here, numbers were showing up in this dark gray section. As I put in numbers in the light gray section, number shows up in the dark gray section. And then you notice that the number has different places that it shows up in. So what you're seeing in this dark gray section is the cost of replacement. So it's estimating that if you buy equipment now, based on the depreciation rates that are applicable, you know, these ones we say you don't need to touch them. You can adjust them if you don't feel, if you have a better number or updated number, but most of the time you don't need to touch them. So this equipment machinery, this depreciation of 25% means that any equipment you buy, you're depreciating it at 25% annually. That means by the end of 4 years, you would have fully depreciated that equipment, and it will be, you will need to buy a replacement. So that's what 25% means. The ones at 20% means that you use it for 5 years. Installations, 10%, you use it for 10 years. So equipment, you will notice that it shows up a new cost at the end of the depreciation period. And that cost is the cost of replacement. And that cost has factored in inflation. So you can see it started from 3 million, is now 5.8 million. Because it has factored in what inflation year on year will be based on the inflation rate you put in the general section. And it has computed how much it will cost to replace it based on that depreciation rate and the inflation rate. So you see that this gray section has computed it for you. You don't need to bother yourself about how to compute it. Just put in the information in the light gray cells, and then the dark gray portion will compute itself. So let me just put in some dummy numbers so we can move on. Under startup costs as well, to start up your business, you will also need, in addition to all this fixed assets and all this heavy duty equipment, vehicles, installations, furniture, you will also need money for opening inventory. You need money to opening inventory refers to allocation for purchase of initial stock of products for sale and services to be delivered in the first few months. Let me give the example. Like, let's say you are running an electronics business, you sell solar panels. So that you can start your business, you will need to have a stock of those solar panels. So how much worth of stock do you need? That is what this section is asking you for. And there's supposed to be a drop down here that allows you to select whether it is 3 months worth, 6 months worth, 1 to 3 months worth. I'll come back to this section so that you will know what code that you're going to put in here that will help you populate the opening and closing opening inventory. Initial working capital, same logic. In addition to when you're about to start your business, in addition to stock or inventory to sell, you also need money at hand to be able to pay vendors, pay employees for the first few months of operating. So that is also factored here. And I'll return with the codes that would help you compute this section here. And then finally, contingency, which is what percentage of total startup crop you need when you're starting. You can either put in 10%, 20%, 30%, and it will compute. The gray section will compute. I'm going to come back to this section C here so that you will know what number to put in here so that you can bring out your opening inventory and working capital. But for now, let's move on to the next section. Next section is headcount analysis, and it's over here. You're going to enter the salary and number of employees you expect for each key business function. Not all headcount group may be relevant to your business, so only few where necessary. So only fill the part that is necessary to you. So you see different headcount groups: senior management, business development, sales or customer support, marketing, IT, back office support. So this template allows you to fill what number of people do you expect to employ, like in year 1, year 2, year 3. So for instance, let's say you want to hire 2 business managers in year 1, increase their number to 4 in year 2. Then you want to hire 1 business associate in year 1, increase the number to 3 in year 3, and then keep it stable up until year 6. And then maybe by year 6, you will then double their number. So this is how you reflect all of that. That's how you reflect that. You put in the numbers, where number is, where this hash sign is, and then you put in their base annual salary. What is the salary for the base annual salary for manager? What's the base annual salary for associates? And you notice that as you put in the number, it automatically populates what the salary will grow by year on year for the next 10 years. There's something else you will put in is what is your benefits percentage of salary? It can be anything between 5% to 30%. So you can leave it at 10%. That benefits percentage of salary is how much other than their salary will you make available for training them as benefits for them, for training them, for providing them with health insurance and other kinds of benefits. So that's what you will do. And then for each category of staff, you will fill in what you need to fill. But you notice that as you fill in the numbers, nothing happens until you fill in salary. So let's just estimate those, and then we can move on to the next section. Next section is operating costs. So this is now the space where you start to put in the actual numbers. How much is your baseline cost for your raw materials? How much are you going to spend on raw material typically? How much do you spend on direct labor? And then the definition for all this, some of these terms that like factory overheads is in this glossary. Administrative costs, what does that, when you say administrative, what does that mean? The definition is here, so you just make reference to the definition. So I'm just going to fill in a couple of dummy data so that we can move things ahead. When it comes to fixed costs, you see that there's nothing to fill for salary and wages because this place is taking what has already been filled here for what you filled in the headcount section, section D, and it has just brought in the number here. But you fill in for the other numbers. And then you will notice that the numbers year 1, year 2, year 3, you can see that they are growing. They are growing based on the growth rates that you provided in section B for the different sections. So, you provided a separate growth rates for rent, another one for utilities, marketing. Let me make these numbers. This is a business that has very low costs. So I'm going to probably need to adjust it, but let me just drop it in. And then you notice that they're not increasing at the same rates year on year. They're increasing based on the different growth rates that you put in section B. So at this point, I will pause for translations. Now we are translating section C to E. Coco, over to you.
Thank you, Omiyumi. Donc, Pour ce qui est donc de la section C, les coûts de démarrage, vous devez déjà noter que la colonne unique, c'est la colonne où il y a l'unité de ce que vous allez remplir. Ça vous sert d'orientation. Parce que certains gens posent la question. Quand on met pourcentage, ça veut dire que c'est un taux que vous devez mettre. Quand on met la monnaie locale, la monnaie de votre pays, ça veut dire que c'est un montant. Quand on met dièse, ça veut dire que c'est un chiffre ou un nombre. Donc, en fait, voilà comment ça se passe. Donc, ici, donc, concernant le terrain, si vous allez avoir le terrain, mettez dans le montant de ce terrain-là. Si vous devez avoir les bâtiments et les travaux, vous mettez le montant. Pour ici, on a rempli la valeur de 3 millions au niveau de équipements et machines. Et on a mis en termes de véhicules 200 000. Vous voyez donc en fonction du taux que vous avez mis en haut, ça génère automatiquement les valeurs que vous voyez encerclées en rouge. En fait, c'est ça. Maintenant, au niveau des inventaires, on vous demande quel est le montant des inventaires au début. Les inventaires ici, c'est les stocks. Quel est le montant de vos stocks au début et quelle est aussi la durée de ces stocks-là. Ici, on a mis le montant des stocks 586 500 et la durée 20. Au niveau du fonds de roulement au départ, on a mis 2 815 886. Donc, voilà, ici, vous mettez les différents taux pour tout ce qui est démarrage. C'est ça qui va initialiser votre programme. OK, next, please. 10. Donc, dans la section D, on va analyser tout ce qui est personnel et salaire. Ici, vous avez deux choses à mettre. Là où il y a dièse, ce sont les quantités. Et là où il y a la monnaie, c'est au naira. Ce sont les montants de salaire. Au départ, on a d'abord mis le montant bénéfice. Le bénéfice des salaires, on a mis 10%, puisque à côté, c'est pourcentage. Après, maintenant, pardon, les différents postes, c'est ce qui est gras. On a mis ici Senior Management, entre parenthèses CEO. Donc, vous devez ici mettre le nombre d'employés que vous avez au top level et leur salaire de base. Et ici, on a mis 0 partout. Le total sort automatiquement. Au niveau de développement de l'affaire, on a juste à aller mettre au niveau de la base comme quantité. On a mis 2 la première année, year one. On a mis 4 la deuxième année, 4 la... Donc, vous devez, en fonction de l'analyse de votre projet et de votre business plan, déterminer quel est le nombre de personnes de développement d'affaires, c'est-à-dire de développement commercial qu'il y aura dans votre entreprise. Ça dépend de votre activité aussi. Donc, c'est vous qui créez les postes. OK. Ici, par exemple, au niveau du salaire de base du manager, on a mis 4 millions. On a mis 4 millions. Et au niveau de l'associé, on a mis 2 millions ou 200 000, je ne dis pas bien. Donc, le total sort automatiquement. Au niveau des ventes et du support de vente, là, on est à 0. Can you go down, please? Donc, au niveau du marketing, bref, vous devez remplir similairement jusqu'à remplir tout. Il n'y a qu'au niveau... non, can you go down? OK, good. Donc, au niveau de l'administration, vous avez vu, on n'a rien rempli, tout est à 0. Mais si vous avez les valeurs, vous les mettez en respectant dièse. Là où on a mis unité dièse, vous devez mettre un nombre. Et là où on a mis l'unité naira ou bien la monnaie de votre pays en fonction du code de votre pays, vous devez donc mettre la valeur correspondante. Maintenant, au niveau des opérations, dans le personnel d'opération, les opérateurs, on a mis seulement 3 l'année 1 et 2 l'année 2. Au niveau de salaire de base, on a mis 100 000,20, ça c'est en anglais. Et l'unité c'est naira. Je vous dis ici chez vous, l'unité qui va afficher, c'est votre monnaie en fonction du pays que vous aurez choisi. OK, operating cost, please. OK. Au niveau maintenant de fonds de roulement, des coûts opérationnels, des charges variables, pardon. Vous avez donc des coûts opérationnels, vous avez les charges variables, direct cost. Les charges variables, vous avez les matières premières. Ici, on a mis comme matière première un montant de 2 millions. On a mis comme frais d'usinage direct des employés. On a mis 10 000. Les charges consommables de l'usine, on a mis 10 000. Les frais de transport, on a mis 20 000. Au niveau maintenant des coûts fixes, là c'est les coûts variables. Au niveau des coûts fixes, on a mis concernant les salaires ont été générés automatiquement. Les loyers, on a mis 201 100 et ainsi de suite pour toutes les charges. 10 000 partout pour toutes les charges. OK. Et vous voyez que ça génère automatiquement dans la partie qui signale en rouge. Thank you. I think it's all for this level. I'll go on with revenue.
Yes. Moving on to revenue now. And please, in the comment section, can you avoid posting your question more than once? What happens is that the live chat cannot only accommodate so many questions. So you run the risk of your question being missed or someone else's question being missed. So if you post your question once, just post it once and leave it at that so that we can see as many questions as possible. It is making for a pretty challenging experience finding questions when there are multiple questions posted at the same time. I'll now move on to revenue. And in the revenue section here, then again, take note of what you're seeing on column E here. This hash sign is for volume. So I sell 3,000 units. This Naira size is for price. I sell 3,000 units at the rate of 10,000 Naira each. So I am putting my sales volume and sales price, and you can see that he has generated, based on monthly sales volume of 3,000 Naira at the rate of the sales price of 10,000 Naira, he has generated, look at this picture in dark gray, he has generated this is my monthly sales volume, 33,000 Naira annually, 33,000 Naira month on month, all computed to for 10 years. So he has computed my annual sales volume for the next 10 years. This is actually showing sales volume year on year. Another thing you estimate in here is your seasonality. I mentioned seasonality when I was talking in the previous section. And seasonality is essentially are there any predictable trends in how your business sales grow or slump month on month that can be accounted for because of festivities, weather patterns, peak and off-peak periods, and all of that. So for instance, if you have a business that's your sales volume, whether it spikes or it slumps in a month, is dependent on maybe holidays, festivities. For instance, if you sell decoration items, you sell or you do event planning business, you will know that typically your business might experience more volumes in Christmas period, Easter period, and things like that. And Christmas and Easter are usually in very specific times in the year, December or March or April. And then when it comes to those months, where other months you can expect that your revenue will just be 100% of this. So January showing 100% means that it's the same 3,000 I put in that will be there. Well, let's say February, there's Valentine's, and expect some kind of spike because a lot of people want to do decorations. So you can say, I might actually do up to 200% in February because it's a holiday period. March, maybe it's 100%. April, maybe it moves to 400%. On and on and on. So this seasonality does not apply to every type of business. There are very specific types of businesses that you will have noticed based on your market research and even you running the business, you know that based on holidays, weather patterns. Another thing is weather. So maybe you have a business like you sell umbrellas. You will know that your business spikes. Your sales volume go up in the rainy season and they probably even go down in the dry season. So if you have any predictable seasonality month on month based on for your business, you put it in. And then where you have to put in any numbers different from 100%, justify it so that put in the reason for seasonality. So you can say Easter here, you can say Valentine here. So put in the justification so that the person that is reviewing your template can understand why you made your sale 200% for February and for April. And also you yourself, when you come back to the template, you can remember why you changed the seasonality for that month. So this breakdown, monthly sales volume, price, seasonality, you would see it's there's a section to do that projection, put in the assumptions for the 3 different product lines. So the 3 lines, our own template example, we're using 2 businesses. So you can put for all the businesses that apply. I'm going to skip the second business for the interest of time. Now we move to section G, working capital. Let's read through. Working capital is an estimate of the amount of cash your business needs to fund day-to-day operations. Availability of working capital depends on how fast you can collect cash, how long it takes your business to turn over inventory, and how long you can afford to wait till you pay your vendor suppliers. Receivable days, payable days, inventory days. These don't apply for all businesses, but if some of your business, let's take for example, you run a credit, you have set credit sales in a business. Maybe you have corporate customers, and corporate customers they don't pay every day. Sometimes they decide to consolidate all their vendor payments and they pay once just for efficiency purpose. So you might be supplying maybe skincare or catfish to a corporate customer, and you're supplying them every day of the month, but they make the final payment to you on the 28th day of the month. So your receivable days, if let's say you supply them day 1 every month and they pay day 28 every month, your receivable day is day 28 minus day 1, which is 27 days. Well, for most businesses, it might not be that cut in, that very clear cut. Maybe you are not only supplying them on day 1 of the month, you also supply them day 3, day 5, day 8, day 28. So for the sale that you supplied on day 28 and they paid day 28, the receivable day was 0. So you now have to generate and do an average. So because of that, you cannot calculate your receivable day based on one transaction. You have to generate an average of your transactions on how fast your customers take to pay. And that average must also reflect the fact that some of your products you collect cash upfront, you never provide credit. So generate an average that is telling the most realistic picture. Don't put 28 days when you know it's only 3 or 4 of your customers that take 28 days to pay you. Or don't put 1 day when you know that there are some customers, even though you sell to them just once in 6 months, they still take 30 days to pay you. So generate an average. Let's just put an average of, example, 14 days. Payable days is the other way. How long do you take to pay your suppliers? So maybe the people that you're buying raw material for, you have an agreement with them that I will pay you after 7 days, after 7 days of delivery, because I need to confirm the stock you've given me, do some things like that. So it will take me 7 days to pay you. That's your days payable, and then you put it there. Inventory days is average days required to sell 1 batch of inventory. For instance, let's give the example of the skincare business. When they start their production line, when they turn on their production equipment and start that process, and they pour in raw material into their mixing machine and all of that, by the time that process is over, they will come out with 300 bottles of skincare lotion, but they only sell 200 bottles a month. So if each batch or each batch of inventory is 300 pieces, but they only sell 200 pieces in a month, that means for them to sell out that whole batch of 300 pieces, it will take them, it's at the end of month 2 that they would have sold it all. So their inventory days is somewhere between month 1 and 1 month to 2 months is like 45 days. You can estimate it as 45 days. This 45 days is actually too long for most businesses. Ideally, as a business, you should be turning around faster than 45 days. But let's just put it here based on this example. I will now move on to startup financing. Startup financing is essentially the mix. And again, some of these parts might not be relevant to you. So what is the mix of, let's assume you're about to start up, or if you started up, your post-investment expenses. let's assume as a business now, you need 10 million to get started. Off the top of my head, I'm not really sure what $5,000 converts to 10 million. But out of that 10 million, in your own hand, you have like 500,000 naira. You're seeking a grant from the Foundation. You're also going to approach a microfinance bank to maybe see if they can give you 3 million naira. And then you're also going to seek equity. Well, you're going to tell your brother or your uncle that I'm starting a business. If you give me 2 million naira, I can give you maybe 1% of the business, that kind of thing. So that represents your financing. It's a combination of your capital from the Foundation, capital from bank, from equity investors. What is that percentage mix that is going to make up that 10 million that you want to use to start or to run your business post-investment? And let's just enter some dummy numbers over here so that I can move things forward. 30, 15, 20, and 35. So you notice this part under is red. It's saying financing proportions incorrectly entered. We check entries. So it's only going to be red. It's going to be red. It's only going to turn green when everything here adds up to 100%. So you can see it's currently 65%. So by the time I press enter, it's going to turn green. So if you complete your section and it's still showing red, recheck your proportions. It's because they're not adding up to 100%. Check your proportions until they add up to 100%. I will pause now. Okay, I'll pause now for translations. Maybe I should just finish this. What will you recommend? We have done F, G, H. Should I complete I and J before you translate, or you would like to translate now? Okay, I can't hear from him. Let me just go on ahead. Equity financing, section I, which is use the table below to estimate how much equity you need to source in the 2nd to 10th year of business operations. So again, this section I and section J, they are optional. But if you know that you definitely have plans to go and seek for equity, maybe from venture capitals, from family friends, angel investors, you put in what that money that you're going to seek. Let me give you an example of the 10 million naira person that knows they're going to need like 15 million naira in their 4th year. And based on the money, the profit they retained any by the end of year 4, they would have had up to that. So they know they're going to go and look for 2 million naira, additional 2 million naira equity. They're going to go and look for additional 8 million naira in debt. Just put in that schedule, whatever it's going to look like here. So the debt facility allows you to account for up to 3 debt facilities. You will indicate the year that you start. So that person wants to go and take out a loan in year 4. It's showing me because I'm showing year 4 2 times, even though I did not put in a number. So the person wants to take out a loan in year 4. You put in the name of the amounts that you're planning to, because you have accounted for the loan that you're taking here. So you will not, you're not supposed to change this debt facility 1. That's why this section is in blue. So, but if you're taking out a loan in year 4, come to debt facility 2 and put in the amount of the loan that you want to take. And then you can put in, okay, what's my repayment payment? Am I going to pay this in 1 year? That's then if it's 1 year, you leave it at 5. Or if you're going to take 3 years to pay it to year 7. So, your repayment period is the number of years you're going to take to repay. So put 3 years if you want to spend 3 years repaying it, so that you put the loan end at year 7, and you can do the same. Again, I and J is really optional. If you know you don't really have plans to go and borrow additional money, you can leave them blank. I'll pause here for translations. Foko, over to you, starting from F, revenue.
OK, thank you, Omoyumi. Donc, pour ce qui concerne la section F sur les revenus, il est question pour vous de, comme pour les autres, mettre les informations. Comme par exemple, la quantité de base de ventes chaque mois. Ici, on a mis 3 000. Et les produits, et le prix des produits Ici, on a mis 10 000. Dans la prochaine session, vous indiquez, dans le prochain point, vous indiquez la saisonnalité telle que vous estimez. Ça veut dire que votre produit, est-ce que ça se vend la même quantité tous les mois ou bien mois par mois, il y a une récurrence annuelle. C'est ce qu'on appelle la saisonnalité. Vous devez donc indiquer la saisonnalité chaque mois. Comment est-ce que vos ventes se comportent? Et comme on l'a dit, ça se génère automatiquement. Ça vous donne les courbes que vous voyez au point de donner vos ventes annuelles. OK, next, please. Can you go down? OK, donc la saisonnalité est gérée donc produit par produit. Au niveau maintenant du fonds de roulement, ici vous indiquez les délais de paiement client, les délais de paiement fournisseur et la durée de vos inventaires. Délai de paiement client, vous accordez 14 jours pour les créances. Vous accordez 7 jours pour les dettes auprès de vos fournisseurs et vous mettez 45 jours la durée de vos stocks. Hash, please. Startup financing. Donc, au niveau de financement de démarrage, il est question d'indiquer quel est le rapport entre vos sources de revenus. Ici, par exemple, vous avez dit votre épargne personnelle, c'est 30%. La subvention, c'est 15%. L'ouverture de capital, c'est 20% et la dette, c'est 35%. Ça vous fait donc un total de 100%. Voilà comment votre activité est financée au démarrage en termes de pourcentage. Equity, OK. Maintenant, au niveau du financement en capital, vous devez aussi indiquer quel est le montant que vous recevez. Là, on a mis 640 000 et les autres sont générés automatiquement. Vous avez mis 640 000. On a le solde d'ouverture et le solde de clôture. Il faut aussi dire que l'année 4, vous avez encore eu 2 millions. Alors, les calculs sont faits automatiquement. Debt financing, please. Donc, au niveau du schéma d'endettement, vous avez le logiciel, le fichier vous donne 3 possibilités. Et dans chacune des possibilités, vous devez indiquer le nombre d'années de l'endettement, vous devez indiquer le montant du prêt, la période que vous allez, l'année d'endettement, le montant du prêt, on a 1 120 000, la durée du remboursement et la dernière année que vous aurez avant d'avoir tout payé. Non, la durée totale qui est de 6 ans. Vous le faites pour chacun des crédits que vous allez prendre. Il y a le crédit 1, crédit 2, crédit 3. Next, please.
Okay, this is where I stopped. I want to
Right.
take on some questions. What's left here are just the debt schedules, PPE, depreciation schedules. You don't have to fill any of this. I noticed a question in the chat that says, will COGS, cost of goods sold, will it be zero because I am not in the manufacturing space, because I'm a services-based business? No, you still have cost of goods sold even if you're not in manufacturing space. So for instance, if you're in event planning, event management business, your cost of goods sold can include your venue logistics, your third-party fees, your staff wages, the wages of the staff that will have to set up that event. Because if you don't pay them or if you don't hire them, you don't even have an event product. So those salaries will be your cost of goods sold. Any agenda, name tag, anything you need to print will be part of your cost of goods sold. If you are in the IT space and you sell subscription-based services, your cost of goods sold will be your web hosting costs like AWS, infrastructure costs, your DevOps, salaries for your developers, your customer support, the people that need to maintain the uptime. Your license costs, your software license costs is part of your cost of goods sold. Any cost you're spending on data storage, data backup, security services is part of your cost of goods sold. So even if it is, you cannot pinpoint the raw material, you think of the labor costs involved, the people that you need to have them as your on salary. You need to engage their services. If you don't engage their services, you don't even have a product. So you can think about any software costs, licensing costs, development costs, space costs. Practically every business has a cost of goods sold. So the fact that you are not in manufacturing does not mean you don't have cost of goods sold. I also see, receivables, transport service. Do I have days receivable and days payable? It depends on what type of transport service. If it's just passenger transport, moving passengers, and they pay you as you are, as they are using your service, you might not have receivable days, but you might have payable days. For instance, to maintain those vehicles that you're using to move people, you might be buying fuel, spare parts, all those things, and you might have your suppliers that you don't pay immediately, maybe for one reason or the other, that you need to confirm your stock, you need to confirm the goods received is the same thing as good paid for, so you don't pay them on the same day. Or if you're in cargo transport, of course, you will have receivable days because your customers, most of the time, they only pay you after they have received their goods. So you will definitely have receivable days. But just ask you, the main question you're asking is, do all my customers pay me on receipt of service or goods? If the answer is no, then you have receivable days. Do I pay all my suppliers once I collect from them? If the answer is no, then you have payable days. It's not every business that has it, but just reflect on your business type to determine whether you have it. I'm also seeing questions about use of dollars. That some people they use dollars in their business plan, and now they are wondering whether to use naira here. You can change this financial template to dollar. So you go back to this place in general section, business currency. You can see that the number in front of there is 2. That number is a local currency toggle. Once it's 2, it's showing your local currency. But if you change that number to 1, if you step in there and change the number to 1, you will see that all the currency has changed to dollars. So try and make sure that your business plan and financial plan are using the same currency basis. If you use dollars in your business plan, use dollar in your financial plan so that it's easy for the person that is reviewing to reconcile your numbers. Don't make it too hard and too confusing for them to review your templates, your submissions. Then I also saw a question that, do I change that I have land, but I'm renovating. So when it comes to startup costs, I'm not buying land, but I'm renovating and refurbishing. So should I change the cost I'm using on refurbishing? Should I put that as my land cost? No, put it as your building and civil works costs. So when building and civil works covers a whole basis of either building a new establishment or a new creation, a new construction, or refurbishing an existing one. So put that cost under building or civil works. And if you need to buy new furniture, replace the furniture, replace the light fittings, the water, any of that, do plumbing, put the cost that you incur there under furniture and fitting. So allocate the cost properly. You can reflect them, but just allocate them in the right section. And then the last question I saw was seasonality for IT businesses. Like I said, not every business has seasonality impact. But think about your business. You can be an IT business and you can have seasonality based on festivities. Like people that do greeting cards, holiday cards, like digital cards, digital greeting services. You're IT business and you will be impacted by seasonality because your business numbers can spike when Valentine, Easter, Christmas comes up, or food, or even if you are in IT and you run like a food-based services, or you sell decor, you sell clothes, you might notice that they spike during holiday periods. So again, seasonality is just you trying to have a better estimation of your monthly sales. If you notice that there is no seasonality that is any variation month on month that is stable, then just leave this seasonality the way it is. Just leave it at 100% for all the months. Now, after you've put all the information in assumptions, you can now come to income statement and you will see that all of it has been populated. All the information has come in. You can see my revenue is blank because I jumped over revenue for product 2 because of time. So you can see that it's not bringing out anything. But if I go back to assumptions and just put in revenue was section D, I think section F, I believe. So I didn't put anything. But let's say I go in there and I just go and put 20 and I put that rate of 10,000. When I go back to my income statement, you will see I now have information income statement. Also, please note that this income statement has summarized your numbers in the thousands. So this number is 1 billion. This amount is 1 billion, but it looks like 1 million because it is summarizing it as he has estimated it as thousands. That's how it's typically reflected in financial statements. So don't be bothered about that. It is just summarizing it so that the numbers are not so long that it is now making the financial statements too hard to read. And then something that you can see from this business, because I jumped over all I put in very low numbers for the expenses. So it looks like this business is already generating a very beautiful profit from year one. It might not be true to life because I didn't put in very realistic expenses. So, but from here, you can tell whether the business is profitable in year one or not. So for instance, if I step down that revenue and I go back and I just step it down so that the number is not as high as it is now, you will notice that it is now running a loss, and you can see the numbers are in brackets, which expresses that it's a negative number. Likewise, your balance sheet has now been generated. Balance sheet figures have now been generated. Cash flow has now been generated as well. So you don't need to enter any one of these. They'll be generated once you complete your assumptions. And by the time you get to your assumptions and you can see that everything is just negative, 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 it's now an opportunity to go back and revisit your business model. What can I do differently? Should I see how I can improve my revenue position? Maybe I need to increase my pricing so that my business will be profitable. Maybe I need to think about these expenses. Do I really need to hire 5 people in the one? Maybe if I review my salaries, I might be profitable. So once you generate these financial projections and you see the outcomes, it then gives you the opportunity to go back and revisit them and tweak them so that it becomes the business projections are much more true to what you have in mind, not just changing it because you think it looks better when submitted, but changing it so that it provides a picture of a much more healthier business. This is also another summary, but it's not really showing up well because I'm using Google Sheets. I will pause now for translations. What I did was I answered the questions, I answered the questions on can we use land costs, can we use renovation costs in land? What about seasonality for IT businesses? Do I have receivables and payables in transport business? And can I change these numbers to dollars? And you can change it from here. So, Coco, please translate this before, and then I think we can call it a day.
Okay, thank you. You say land, dollar, IT, and what else? Okay, land.
Does IT business have seasonality? Is there receivable and payable for transport business? Even though that question was in English, so maybe we might not need to translate. I think the person has gotten it. And then how do we change the currency to dollar? So you change it from here, this business currency section in general, change this number from 1, change the number from 2 to 1. So when you change it from 2 to 1, your financial template will change to dollar.
Okay, thank you. Donc, je commence donc par répondre à quelques questions avant. I can ask the question before going to the next session. OK. Donc, il y a des gens qui ont posé des questions sur le terrain. Est-ce que le terrain, on peut générer Est-ce que le prix du terrain est aussi généré automatiquement à travers un taux de croissance? Il faut déjà dire que le terrain, ce n'est pas des choses qu'on achète tous les jours. Au niveau du dollar, il y en a qui disent qu'ils veulent avoir le dollar comme monnaie. Au niveau de la monnaie, de votre monnaie d'affaires, vous devez aller indiquer et mettre le taux du dollar, le nombre du dollar. Au niveau de IT, est-ce qu'il y en a qui demandent que est-ce qu'il y a les clients dans le transport? Vous devez là savoir que de façon générale, on vend à crédit dans tous les secteurs. Il ne faut pas toujours croire que vos secteurs sont particuliers ou vos secteurs sont spéciaux. Les affaires, ce sont les affaires. Partout, c'est exactement les mêmes comportements, généralement. Donc, ne vous mettez pas dans des situations d'inconfort où vous estimez que votre projet est particulier. Les données, les enseignements qu'on vous donne sont des enseignements généralisés pour les affaires. Quelle que soit l'activité, on peut vendre à crédit. OK, donc je m'arrête là-bas. OK, can we go to the next section that I can explain? Can we go down, please? OK, donc ici, on a les données générées dans notre tableau à travers, pardon, les résultats générés par notre tableau à travers les données que nous avons introduites. OK, can you go down, please? Don't know.
No, I think this is where I stopped. So it's
Okay.
fine. Thank you.
Donc, okay, no, let me just explain to them one or two things. OK,
Okay.
quand vous introduisez les données, vous devez aller dans l'onglet de bilan. Dans l'onglet de bilan, dans l'onglet de trésorerie et l'onglet de résultats, voir à quoi ça ressemble. Quand les valeurs sortent entre parenthèses, ça veut dire que c'est négatif. Et en fonction de ces résultats, vous devez rentrer dans la colonne des données, gérer certaines modifications. Donc voilà comment ça se passe. C'est un simulateur. Vous devez aller regarder le compte de résultats, aller regarder le bilan et regarder la trésorerie pour pouvoir apprécier à quoi ressemblent vos résultats. Et s'il y a des choses qui manquent, vous rentrez dans le tableau, dans l'onglet des données pour remettre vos valeurs. Il y a des valeurs qu'elle avait oubliées et elle a mis. Donc, on ne va pas revenir là-dessus. Donc, voilà globalement comment est-ce que ce tableau Excel se remplit. OK, you can move on, please.
Okay, the tech team, I think our time has run out. I'm not sure, but if I noticed 2 or 3 more questions that I would just want to address. Somebody said that their box is still showing red, their startup financing box is still showing red, that they put in 50% for owners and 50% for equity, and it's showing red. Make sure you remove all the other numbers there, and it should show green. I hope I have addressed that question now. There are some people that are still confused about the currency change. Note that in front of business country, that's where you put your country code, your code for your country in Africa. And I'll flash that screen just before we round up. That's where you put your country code. But business currency is where you want to switch from either your local country currency to dollar. In business currency, it only takes 1 or 2. You put it as 1 if you want it to show dollar, and then you put it as 2 if you want to show your local currency. And then in business country, you put your local country code, where it is 37 for Nigeria. I believe it's 20 for Ghana. I think it's 13 for Congo. So you would see it on that index. I will flash that index and that page that shows all the countries and the index numbers. And just do a screenshot, find your own country and put your country number. And make sure you leave this number as 2 if you're going to use local currency. But if you want to use dollar currency for your financial plan templates, change this number to 1. You don't need to change the number above. I saw another question on tiger nuts that I started with sales of tiger nuts, but I'm creating other tiger nut products. Yes, please, as long as it's still within the same, idea and concept, which is utilization of the tiger nut product. But don't add on catfish farming or training or event planning. Don't add on a business that is not even related. Why you can add on other tiger nut products is because it's the same facility you use. It's probably even the same people that are making the drink that can also make the product. So you don't need to build a whole new different business and buy new equipment, hire new people. You can still utilize the same resources to generate the same product. So you can add on that. There's also subscription-based business. What is my receivables? Receivables, like I guess I don't. I believe that you collect money as the person is getting the subscription. So you don't need to put in anything in receivable. It's zero. You collect as you pay. Nobody owes you. But then I know there's some subscription businesses that because they want to attract people, they do 7 days free. So it's after 7 days that you collect your money. They do a 7 days trial period or things like that. If you're not doing all those trial periods, then you can leave your receivable days as zero. I think with that in mind, then someone said is reducing, their utilities is reducing. The only reason why your numbers will be reducing is
Hi, Omomi. Can you hear us?
yes, I'm back now. I was stepping down my screen so I can share the other one.
Okay. Okay. All right. Over to you.
Can you hear? So I want to share that screen one more time, the screen that has the country codes so that everybody, if you missed your country codes the first time we were talking, you can quickly see it. I'm just moving to that page very quickly. The other thing I mentioned is that the session is over. We have completed the session. So I'm just going to flash the screen and then I will mute for a proper roundup of the session. So this is the screen. Okay, TEF team, over to you. We have completed the session. My apologies, everyone. I said I was going to go back to section C. So section C is, if you're using Google Sheets, just if you can see my mouse, you are going to have to pull up section C from the back end because it's just not, the drop down to select it is just not visible on the front end. So if you're using Google Sheets, go over to the bottom of your sheets. If you go over, you see a plus sign that shows new sheets. And then you see this hamburger sign that shows all sheets. So click on all sheets and then you see an 8 section. You know, I told you there are 7 tabs. You see an 8 tab called sheet 3. This sheet 3 is the back end. So click on it because you cannot see the drop down. So in sheet 3, you will see lists. This is what you will see. Go over to E, F, G, if I believe this is H, G, H, columns G and H. So where you have opening inventory selection and working capital selection. And then what you are going to do, don't touch anything else on this sheet because it's a back-end sheet. If you touch something you're not supposed to touch, it can spoil your whole template. All you need to do is change this number 3 here under opening inventory selection, above opening inventory selection, and this number 2 here above working capital selection. So change it to what you want it to be. So for instance, if at the time you're starting up, like I was giving an example of the solar panel business, if you want to have startup capital available to sell for 3 months, you leave it at number 3 here. If you want, if you need only startup capital of direct, if you need only opening inventory of 1 month, you change this to number 1. If you need for 2 months, change this to number 2. If you need it for 3 months, change it to number 3. For 4 months, change it to number 4. For 5 months, change it to number 5. Likewise, if you come to this section here, column K, you change this one. If you need 1 month's worth of working capital, change it to number 1. If you need 3 months worth, change it to number 2. If you need 6 months worth, change it to number 3. If you need 9 months worth, change it to number 4. If you need 12 months worth, change to number 5. So you notice that 1, 2, 3, 4, 5 is based on the order of this list. So if you want this one, you select 1. If you want this, 2, 3, 4, 5. So you will need to go to the back end of your sheets because the drop down is just not showing if you're using Google Sheets. And I know most people are not using Microsoft Excel because of the payment restriction. But if you're using Microsoft Excel, you will need to go to the back end. Okay, I'm not sure if Foko is still on the call for translations, but that is it about section C. And that brings me to the end of this presentation. Thank you once again. Melu Foundation team, Ibuku, over to you. I've completed this section.
All right, thank you so much, Omomi. Thank you. It was very, very insightful. And I'm sure the entrepreneurs have taken a lot of notes down and have clear understanding of how their financial or what their financial projections should look like, especially using the template we have shared with them. So thank you so much for the session. We appreciate you. I think Foko has dropped off. We also appreciate Foko for doing the translations in French. So thank you so much, Omomi. So just quick updates. Again, the deadline for the training and business plan and financial reporting submission and your 2 to 3 minutes video is 1st of June. So please take note of that date. There will be no further extension. By next week, we would, once you complete your training, your AI training, your business management training, and of course, the green business training for those in the agric and in the green economy sector, you would have access, automatically have access to the platform to now start uploading your document, your business plan, and of course your 2 to 3 minutes video. And then you can also upload your business documents and bank details. So just to note that a lot of people had sent emails that, they're unable to access the AI training, module 1 to 3. We're currently working on it with the technical team. Once it's resolved, we will officially communicate to you so you can proceed with your training. And also be notified that module 4 and 5 will be available next week. So please just keep reading your emails to stay updated with all the information that we're going to be sharing. So again, I wish you all the best. But please take note of the dates. 1st of June is the submission, final submission date for business plan, financials, and 2 to 3 minutes video, and of course, the end of training, the business management training, the AI training, and the green business training. So thank you very much. Have an amazing weekend, and we wish you all the best. Thank you. And thank you again, Amomi. Thank you very much.